Imagine you're on a road trip from Buffalo, New York to Fort Erie, Ontario. The journey is short, just a few miles across the Peace Bridge, but in that brief drive you're about to cross more than just a border. You're stepping into two completely different worlds when it comes to how people bank, save, and spend. In Buffalo, banks are everywhere. Big names, regionals, and tiny community banks all competing for your business. It feels like every corner has a different logo, each promising better rates, friendlier service, or a more personal touch. It's chaotic, vibrant, and full of choice. The sheer number of options can be overwhelming, but it also means you can find a bank that fits your exact needs, whether you're a student, a small business owner, or just looking for a place to cash your paycheck. Cross the border, and suddenly, the scene changes. The energy shifts. The streets seem quieter, and the banking landscape transforms before your eyes. In Canada, you see only a handful of familiar imposing bank names: Royal Bank, TD, Scotiabank, repeated everywhere. These banks dominate the skyline and the street corners, their logos instantly recognizable from coast to coast. The variety vanishes, replaced by a sense of order and uniformity. It's as if the entire country agreed on just a few trusted brands, and stuck with them for generations. It's like going from a crowded flea market, where every stall is different and you never know what you'll find, to a high-end department store with just a few brands, each one polished and predictable. The experience is more streamlined, but also less personal, less varied. Here's the wild part. The US has about 4,500 banks. Canada, just 79. That's right, in a country nearly as large as the US, you can count the number of banks on your fingers and toes. That's not a typo. One large US state has more banks than all of Canada. In some American cities, you'll find more banks on a single street than you will in an entire Canadian province. This isn't just a quirk. It's the result of two very different histories and philosophies. The way each country's banks look and operate is a direct reflection of the choices made by lawmakers, business leaders, and citizens over centuries. America's system is built on choice and localism. Canada's on national power and stability. In the US, the idea was to keep banks small and local, so no single institution could dominate. In Canada, the goal was to create a few strong banks that could weather any storm. So why does banking feel so different on either side of the border? It's not just about the number of banks, but about how those banks interact with their communities, how they're regulated, and what they're allowed to do. The answer lies in how each country decided what banks should be, local and plentiful, or national and powerful. These decisions were shaped by everything from geography and politics to economic crises and public trust. It's a story of federal power versus states' rights, and a deep-seated fear of centralized control versus a desire for stability. In the US, suspicion of big banks led to a patchwork of small ones. In Canada, faith in national institutions led to a handful of giants. These choices shaped not just the banks you see, but the experience you have as a customer. Whether you're greeted by name at a local branch or served efficiently by a national chain, it all traces back to these foundational decisions. And it all starts with how each country wrote the rules. The laws and regulations that govern banks are the invisible forces shaping your everyday experience, from the fees you pay to the services you can access. Let's see how history set these two systems on such different paths, and why, even today, a simple border crossing can feel like stepping into a whole new financial universe. To truly understand today's striking banking divide between the United States and Canada, we have to travel back in time to the very founding moments of both nations, when their leaders faced the daunting task of building new societies from scratch. The United States emerged from a revolution against monarchy and centralized authority, and that deep suspicion of concentrated power shaped every institution, including banking. Early Americans fiercely protected local control, believing that power should rest in the hands of the people and their communities. As a result, states were given the authority to charter their own banks and set their own rules, with little interference from Washington. Many states even went so far as to ban banks from opening branches outside their hometowns, fearing that outside influence could threaten local interests. The result was a landscape dotted with thousands of tiny, independent banks, each one serving just a single community, and each one shaped by the unique needs and values of its town or region. Canada, meanwhile, took a dramatically different path. Its founders, wary of division and regionalism, believed that only a strong, centralized government could hold the vast country together. From the very beginning, Canadian leaders made banking a national affair, enshrining federal control in the Bank Act and ensuring that Ottawa, not the provinces, would set the rules for the entire country. This meant that banking in Canada was designed to be stable, unified, and able to serve a country that stretched from the Atlantic to the Pacific. Provinces were not allowed to charter their own banks, and nationwide branching was not just permitted. It was actively encouraged, so that banks could reach Canadians in every corner of the land. Canadian banks were expected to serve everyone, from the bustling streets of Toronto and Montreal to the most remote villages, often connected by railways and telegraph lines. This single foundational decision, local control in the US, national control in Canada, set the stage for two radically different banking systems. America's patchwork of state laws created a fragmented, often chaotic system with banks that were small, numerous, and sometimes unstable. Canada's centralized approach, on the other hand, led to the rise of a handful of powerful, coast-to-coast banks, institutions that could weather storms and serve the entire nation. These early choices shaped not just the number of banks, but also how they operated, how they competed, and how they responded to crises and opportunities. Two countries, two philosophies, one rooted in localism and individualism, the other in unity and national purpose. And that's why, even today, the banking worlds of the US and Canada look and operate so differently, shaped by the choices made centuries ago. America's state-based system led to thousands of small community banks. Every new town needed its own bank, since outsiders couldn't just open branches. Your banker was your neighbor, but this local focus made banks fragile. If the local economy tanked, so did the bank. That's why the Great Depression hit US banks so hard. Thousands failed, taking people's savings with them. Even after reforms, the fragmented system persisted for decades. Only in the 1980s and 90s did laws change, allowing big banks to buy up smaller ones. The number of banks dropped, but the legacy of localism remains. Today you'll find everything from giant national banks to tiny community lenders. It's a system rich in choice but also complexity and risk. The American banking landscape is a living relic of its localist roots. Canada's banks were national from the start. A few big institutions like RBC and Bank of Montreal spread coast to coast, following the railroads and serving every community. This created a system that was consolidated and, crucially, stable. During the Great Depression, not a single Canadian bank failed. Why? Because their risks were spread across the whole country, not tied to one town. Regulators liked the simplicity of overseeing a few big banks. The banks liked the lack of competition. Over time, this created a self-reinforcing cycle. Big banks got bigger and more stable. Today, Canada's banking system is an oligopoly, dominated by just a handful of giants. For Canadians, this means stability, but also less choice. Meet the Big Five: RBC, TD, Scotiabank, BMO, and CIBC. These banks are everywhere, on skyscrapers, hockey arenas, and tiny town branches. They control most of Canada's financial assets and set the tone for the entire market. Their size means you get the same service from coast to coast, and your accounts travel with you. They offer everything from checking accounts to investment plans, all under one roof. For many, this consistency is a plus. But with so little competition, fees are higher and innovation is slow. The Big Five are reliable but not exactly exciting. Their dominance defines Canadian banking, for better and for worse. Why aren't there more banks in Canada? Because starting one is almost impossible. The government requires huge amounts of capital just to get a license. The regulatory process is long, expensive, and intensely scrutinized. New banks must prove they're safe and stable from day one. Even if you clear those hurdles, you're up against the Big Five's massive networks and brand loyalty. Most new banks are actually owned by the big players. The system is a fortress, and the barriers to entry are sky high. So, what does all this mean for you, the customer, when you're choosing where to bank? The answer depends on what you value most in your financial life: flexibility, variety, or peace of mind. In the US, you're presented with a huge range of choices. National banks with thousands of branches, regional banks that know your local community, small-town credit unions, and even online-only banks that operate entirely in the digital world. This fierce competition can lead to better deals, more innovative products, and special offers designed to win your business. But it also means the banking landscape is more complicated, with each institution offering its own unique mix of services, fees, and requirements. Service quality, account fees, and product features can vary dramatically from one bank to another, making it tough to know if you're really getting the best deal. To find the right fit, you'll need to shop around, compare rates, and carefully read the fine print, sometimes more than once. In Canada, the experience is very different. Here, you get consistency and reliability, thanks to a banking system dominated by the Big Five banks. These major banks offer almost identical products, interest rates, and fee structures, so you know what to expect no matter which one you choose. The process is simple and predictable. There's little need to research dozens of options or worry about missing out on a better deal elsewhere. Technology is robust, and you're rarely far from a branch or ATM, making everyday banking convenient and accessible. The trade-off? With less competition, Canadians often face higher fees and lower interest rates on savings compared to their American neighbors. Canadians pay for this stability and convenience with fewer choices and less innovation in banking products. Each system has its own perks, and its own price. The US offers variety and competition, while Canada delivers predictability and ease. Ultimately, it all comes down to what you value most: the freedom to choose, or the comfort of consistency. The US and Canadian banking systems are two answers to the same question: what should a bank be? America chose choice, competition, and localism, leading to innovation but also fragility. If you don't like your bank, you have thousands of options. But that freedom comes with risk and complexity. Canada chose stability and predictability, building trust in a few big institutions. Canadians rarely worry about bank failures but pay higher fees and get less variety. It's a classic trade-off: excitement and risk versus safety and sameness. Neither system is perfect. Both reflect their country's values and history. The real question is, do you want more options or more peace of mind? That's the choice each country made. So, which system is better? It depends on what you value. If you want endless options and the thrill of the hunt, America's your place. If you prefer simplicity and security, Canada's model is hard to beat. Both systems are evolving. America consolidates, Canada faces pressure for more competition. Maybe the ideal lies somewhere in between. For now, these two banking worlds tell the story of their nations. One wild and sprawling, the other careful and controlled. Next time you cross the border, look at the bank signs. They reveal more than you think.